Okay, this is my trade journal for the week of October 3rd. So let's look at my trades here. This is what I have saved. So we'll start with SPY. So first off, let's go to Market Club here. So this is the SPY. So you can see it's a plus 65 with a red weekly, which would tell me the trend is going down. Um, So I was going to trade a bull put spread here because the overall trend has been going up, but you know what? That would be a bad call. So let's not do that. Um, let's look at, so what I did here, just for your edification. So I was just looking at charts. So let's just look at the SPY. And let's compare these. Oops, what happened here? SPY. Come on. Not sure what my computer is doing here. Won't seem to pull up the chart. Oh, that is the chart. Okay. So you can see SPY kind of topped off here and it dropped back down, but I was looking at the short term, it coming back up and not getting above the 218 mark. So what I did for a trade was I did a vertical 216, 216.50. Currently it's trading at that. So I'm anticipating the short-term trend. This is an 18-day. You can see it just popped up. So it's aggressive. It's a plus 65, so that's a better, even though we got a weekly red. So we're going to go ahead and pop that one through. And we'll see what happens. It's aggressive. It's probably not the best move, but we'll do it anyway. Okay, my next one is Facebook, and Facebook has just been doing very well. You can see the overall trend has been up. Let's look at it on Market Club. I didn't look at it on Market Club, so we'll do that. Let's take a look at Facebook. Market Club. Here, we'll open this in a new tab. It's a plus 80, so it's a strong trend. Let's see if it's gotten any. Let's see if our trade triangles are all green. And they are, all green. So you can see a weekly way back here. So probably missed the trend. This is one of the things, but I'm doing a credit spread, so not anticipating any huge downward movement. And currently it's trading at 128. So 128 and change. So you can see my trade here is a 127, 128 put. Bull put spread. So basically, if you're new to this, what this means is it's got to stay above 128, which I anticipate. Okay, so my next one is Yelp. Let's take a look at Yelp. Yelp did, oops, I didn't want to do that. Wrong one. Yelp did something weird. I usually try to keep my credit spreads on the same time frame, but Yelp wouldn't give me a spread for 18 days out with prices. So, and I don't know why it does that. Sometimes I'll show you here in a minute. But you can see strong uptrend here. Prices are a little far away here, which typically prices will come back to their moving average. But you can see when it has some strong uptrends, it doesn't necessarily stop there. If you can see here, it comes back a little, but it still continues its trend up. So again, we're going to trade a bull put spread, and I did a 41.41.50 bull put. Now let me show you something really weird. So I did the 28 October, the weekly, and you could see it's given me well, it's giving me weird prices there too. Did I do the 28? Yeah, I did the 28. I don't know why it's showing negative prices, but you can see here. Oh, this is Amazon. My bad. Let's go to Yelp. Here was the 18-day. You see, it gave me nothing. And then negative here. And if I go to sell this, let's do a confirm and send here. You can see it's going to give me, well, a max profit of 15 and a loss of 35. I don't know why it's showing negative here. If I try to sell this one, that's 25 and 25. I don't understand these prices, these bid-ask prices. So actually, it could have a lot to do. Let's look at the singles for a minute. Could have a lot to do. That's what it is. Open interest. So you can see the open interest isn't very good. Let's look at the 28. It's not very good here either. So actually, it's a good thing we did this because my open interest isn't good. So you know what? We're going to do away with Yelp. We'll take it off of our... We could possibly do a call, but not that far out or not that close in. I don't like it that... We could look at something a little farther out. Let's see. Open interest is better farther out. We could possibly do a credit spread farther out if we wanted to. I usually like to keep them all in the same, but nothing says I have to. But here's the other thing. You see this huge spread, 25 and 75? I don't like that. So you know what? We're going to take... we're going to take that off the table. Let's delete that one. I don't know why my my saved trades went away. Where are they all? So let me pause this a minute and see what happened here. Okay, I'm back. So we're going to get rid of this Yelp here. And I put in, so we're going to delete the Yelp. Oh, did it delete them all? No, just the Yelp. Okay. And I put in an Apple credit spread. Now, Apple's been killing me lately, but we're going to do it. So let's go ahead and, these are my saved orders. So let's go ahead and confirm and send. So this is going to be, so as I confirm and send, I'm going to go over a few things here. So here's my Apple credit spread. So it's going to give me a $220 credit. My max loss is $280. If you do the math there, that's $500. That's my my 2% rule is $500 on this account. So we're going to go ahead and place that, but we'll manage it. Obviously, we won't take a max loss of $280. If we see a like 50 to 60% loss, we'll bail. Or if I get a technical exit, we'll probably bail on this one. But with credit spreads, you can let these go a little bit. So we'll go ahead and confirm and send that. So here's my Amazon. So again, Amazon, my max loss is 310, max profit is 190. It's right around the same. So again, do the math. That's $500. Just so you know, the reason that is because you got an 835, 832, 50. So that's a $250 spread. So two of those is $500. So we're going to go ahead and send that one. My next one is Facebook. Again, you can see right around the same. 305, 195. Again, it's a $500. That's my $500, my 2% rule on this account. If you were using a 10,000 account, it would be half of that. And again, we're going to manage it though, so we don't lose $305. We're going to manage it so we minimize our losses. So we're going to go ahead and, but you can see everything's right around the same, 195 max profit. The other one, Apple, I think is the most. So we'll confirm and send that one. And then last but not least is my SPY. And again, 190 is my max profit, 310 my max loss. But again, $500. We'll go ahead and confirm and send that one. So when the market opens, hopefully all these will post, and then I will update my trade journal from there. Okay, so I wanted to show you guys one real quick thing. If you follow along, you can see I have a position open here. So back in July, I sold a put. Let's go back to my singles here. I sold a put Not on that date. Oh, this is Apple. No wonder why it's not shown. SPY. I sold a put of SPY here in July. And basically what I did was I said I took the existing price, or the price for that day. I subtracted 20% out of it, and I came up with this number here and said, oh, I'd buy it at 188. I was expecting the market to crash. It has not crashed, so this position here will most likely expire worthless unless the market crashes. And if it does, then I'll own SPY at a huge discount. So let me show you why I do that. Okay, everyone was saying to me at work, why wouldn't you be in the market? It's at all-time highs. And that's why. Why would you buy at an all-time high? Would you want to buy a car when it first comes out and it's selling at its all-time high? Or would you rather wait a few months for that car to have sold a lot of, or maybe it didn't sell and the price came down? And that's kind of what I do here. I take the current market, and I'm going to do this again after the 46 days is up. I'll go back in. Let's suppose the 46 days on my current put is up. I would go back in. It's trading at, the current market's trading at 216.30. So I'll go to my calculator here, my handy dandy calculator, and I'll subtract 216 times 20%, which is 43.20, right? So minus 216. So 172.80. So let's go to here, and we'll go out. The last one I did about 180 days out. So 172, so we can get a 175 or a 174. And you can do it there, or you can go further out. But if you sell this, you'll make $150. So let's see, that's 165 days. So 165, let's just divide that by 30 is what? 5.5 months divided by, what did I say? $160. Oh, I did that wrong. 160 divided by 5. So you make roughly $32 a month. Not a ton of money, but now, if you want, you can go even farther out. But the whole point of this is, hey, I want to own this stock. I don't want to wait for it to drop, so I'll just do this here. I could turn around and sell this. I'll get a credit. I'll show you here. If I sell this put, I'm going to get a credit of $304. Now you see this max loss, 17,196. That's not my max loss. That's what would happen if the stock was trading, if SPY was trading below $175 at the time of this expiration date, which is 16 June of 2017. I'll have to buy it at $17,196. However, let's go back to our handy dandy calculator. I don't know why it disappears when I shrink it down. So 17,196. Today it's trading at 216. 216 times 100 shares. Oops. 216 times 100. That didn't calculate right. 216 times 100 is $21,600. But I'm going to buy it for $17,196 if I get assigned. So I saved myself $4,400. No, I saved more than that because I got paid on the front end $304 to wait. So I actually saved $4,700. Not too shabby. So if you look at it, even if I get assigned here, I'm buying it at 17,000. I'm buying it at 175, but you can see it does the math for me here. I'm actually saving even more than that, because if I get assigned on that day, so let's say it's trading at 174, right? And I get assigned, I technically bought it at 171.96. If I wanted to, I could turn right back around, sell it, and break even, just about. So Actually, I would make a little bit more. So if I bought it at 174, right, minus the $3 I got for it, that would be 171. Um, and I waited just a couple days. If it went up to 175, I would break even. So, but basically, that's how I do that. I kind of rambled, so we're going to delete that because we don't want to do it right now. But that's basically what I did. I did it back in July. I sold this put here. I did the same thing. I did the math. I sold this put, and I said 20% at the time was 188. We would have to see a huge crash in the next 46 days, which I don't anticipate we would, but it's possible. But that's okay because I wanted to own it anyway. So, and if I don't own it, that's okay. I'll just rinse and repeat. So anyway, okay, that's it. I will update my trade journal later today when it's done. We'll talk to you later.